to Wealth Wisdom Financial. I think we're on other channels too. I think we're on maybe Not Your Average Financial YouTube channel. Mark, if you shared it on your channel, I have no idea where the heck we're at, but there are 3 people watching right now. So
Already.
already, this is awesome. So really, what we wanted to do today is get more and more of the people hiding in the shadows, making all the magic happen, and bring them out. Like, and this is banking yourself advisors and people who are authorized in this. And we want to call out some BS out there today. And we wanted to bring a few of us on to just chat and say why we do what we do. And we brought in some amazing people here. So I got, of course, Amanda and I, you guys know us. Maybe Mark, and Mark can introduce us, but I'm going to introduce Mark Willis. Mark is a certified financial planner. He was the one that introduced us to Banking Yourself, and it changed our life so much so that we ended up becoming advisors in this. And he has a podcast, been doing this for years, and my hope is to impact as many people as he does. So check out his show. And again, as you guys are listening, engage in the conversation. We don't want this to just be the Mark and the Neely show. But
I was going to say Marky Mark and the Funky Bunch. Is that okay?
Yeah, you could do that.
All right.
So anyway, that's Mark Willis, and Amanda's going to introduce the other Mark.
Yeah, so I got the really great opportunity to really get to know Mark Bashirs this month after hearing about him, knowing how awesome he was in theory, got to really learn in practical tangibleness how fun Mark Bashirs is. And he's probably the wisest person here. You know, we're Wealth Wisdom Financial, but Mark Bashirs brings the wisdom.
Are you saying he's old?
No,
that's
that
what
is
she's
not
saying.
what that means. He has so much experience, has overseen over 3,000 employees, owns his own restaurant still, and is a Bank on Yourself professional. I have no idea how he gets it all done, and living in the great state of Florida as well at the same time. So thanks so much for joining us, Mark, and I'm excited for you to bring your wisdom here to the channel too.
My pleasure. It was fun last week.
Yeah.
Awesome. So last week there was a bunch of Banking Yourself people that came in, and we talked a lot about the group and the movement, but also how we're uniquely different. Now today, we are talking about something that is out there. You know, the internet world is crazy, right? I mean, there's all kinds of stuff out there on the internet, and a lot of people that I've seen come in and say, I have one of those policies. I do infinite banking. I do Banking Yourself. And a lot of times I see this stuff and I'm like, that is a bunch of crap. It is not. And I can't say that to them really. I want to be nice, but usually I'm thinking that. And today we're going to say, what is the difference between Banking Yourself and infinite banking? Is there a difference? And if you're looking at this infinite banking concept, what are the signs, the things that you can look at that may be tail signs that you need to go the other direction or find the right person that understands you? And that's why I interviewed or got Mark here and the other Banking Yourself advisors here. So as well as we're going to talk, I want you guys to be asking questions. Stump us if you want. I don't know, whatever. But I want this to be interactive. So that's my intro. Here we go, guys.
Well, yeah, and I'll be monitoring the chat. It's going to be lots of fun.
I want to just start by saying there is a lot that we could do to begin talking about this, and certainly we all have a history with the infinite banking concept, I would say, and then we are all Bank on Yourself professionals. So I want to set that aside for a minute because first and foremost, I want to go out on a limb here and make a final and firm recommendation for something. I don't always do this publicly, but today I want to officially endorse my good buddy, Larry. He's my favorite heart surgeon. That's right. He may not have been to medical school. He was the first to leave the classroom every day, He was, in fact, he didn't even become a heart surgeon. He went to school for janitorial studies, but he has read a book and watched a few YouTube videos on heart surgery. So I wanted to go ahead and recommend him to anyone who needs heart surgery. I just wanted to put that out there as we get started. And why am I saying that? Anybody have any guesses?
I can't wait. I can't wait to meet Larry.
Yeah. Anybody have any guesses as to why I might be starting us off with that as a opening salvo for why we're discussing the difference between Bank on Yourself and infinite banking?
I'm going to let Mark take that one. The other Mark.
Well, I think it all comes down to training. And that includes owning a proper policy for yourself, which becomes self-training. And that's really interesting how once you dive into the concept and you submit that first policy loan, you still don't know what you're doing, even though you thought you knew what you were doing. And then the learning curve takes hold of you and the whole process and your carrier, how important your carrier and the service is. So it's all about training. And all of us either did it the hard way or the easy way, but either way, we all got here.
Yeah, I think you said that, like having a policy yourself, implementing the strategy yourself, and not, and one of the things I want to ask is like is IUL, those kind of things. Somebody might be like, well, I have those policies. I have one. Is that the same?
Well, it depends who told you. And part of that training then is your ongoing training with your agent, because it's not over once you just put your first premium deposit in. You're going to forget some things that you were taught a month ago, and it might be a year from now when that topic actually applies to you. So having that agent that is there for you via email, via text, and or just appointments is so important.
Hey, look, there are 400,000 life insurance agents in the United States. If that's true, and that's the most recent data I could find, that means there's one life insurance agent for every 800 Americans, roughly. And if there were that many heart surgeons, going back to that metaphor, if there were 400,000 heart surgeons, and you could just stumble into a heart surgeon's degree in about a month or two, would you pick just any heart surgeon that you came across? Would everyone would have an uncle that was a heart surgeon? Would you just go to your heart surgeon uncle just because it was that easy to get? I mean, no, there's hopefully an additional desire for credibility, as you say, training, and I always give people angelic intention, I think, maybe too much so, but there are a lot of financial professionals and insurance agents who stumbled across the great book by Nelson Nash, Becoming Your Own Banker, and which changed my life. And it looks like Amanda's got it right there. Way to go, Amanda! And I'm sure it changed the lives of everyone on this call here today. But there's something more than just reading a book or watching a few YouTube videos, isn't there? And I think part of the concern that at least I share with you guys is that it is so easy to get your life insurance license and then talk about infinite this or wealth family banking that, or the private banking strategies of the rich, or put whatever long acronym you want, the 7702 plan, the secret Reagan income black book of secrets. I mean, the list of these nicknames and knockoffs just continues to unfurl. And yet I have seen, as you guys have, I'm sure, over your years, people handing you an in-force illustration saying, hey, I've got one of these, Bank on Yourself policies. And they think that it's the same thing. And yet, what have we seen? We've seen policies that are, riddled with commissions, slow growing, doesn't have the right riders on it. Somebody the other day, I'll just keep names and everything off of it. He had 6 policies with let's just say a company from the Northwest. I'll just say it that way. All right. The quiet company from the Northwest. And he had roughly $700,000 in multiple policies. And the agent who set these up for him swore up and down that you could use the policy like Bank on Yourself describes, where the cash will continue to grow even when you borrow against it. Absolutely, that is a false statement. And in fact, we looked at his statements that he gave me, and right there under the available loan value of his policy, it said, loans will affect dividends.
Mhm.
And then we dug deeper and it said direct recognition. So if the listeners today have no idea what we're talking about, please hang with us. We're going to get into like the full litany of what it takes to make a Bank on Yourself designed policy. But more importantly, it takes a heart surgeon, a specialist, like the folks here on today's call, you guys, Bank on Yourself professionals, who know not only how to design the thing properly, but how to run with the people who are your clients for the years and decades to come.
Yeah, and I want to just add on something to what you said there, Mark. How many life insurance agents currently in the U.S.?
Since I last said
Wait,
that, another
yeah.
50,000 have come
Yeah.
on board, I'm sure. No,
Yeah.
Zoe says about 400,000 or so.
Yeah, and I love how selective Pamela Yellen is with giving this trademark of Bank on Yourself and the permission to use it to Bank on Yourself professionals and the rigorous requirements we have to go through. There are 200 of us. And if we slip up tomorrow, we could lose that credential, right? If we're not acting in our client's best interest, if we're doing things that in ways that harm the trademark, we could not be able to call ourselves Bank on Yourself professionals even tomorrow, regardless of our track record for the last however many years we've been Bank on Yourself professionals. If we do something like that, it's going to be gone, right? Whereas the trademark for infinite banking, I don't even know if it is even a trademark anymore. It's been not protected the way Pamela protects her trademark. And we owe a lot to her for that. I know, Mark Willis, I've heard you use the analogy of USDA organic certification. That is not something that gets thrown around lightly. And if you see that label, that insignia on a food item, you know it had all these rigorous standards. That's how I look at the Bank on Yourself professional label. You know, if that farmer all of a sudden tomorrow starts using pesticides, it's not going to be very long before that insignia gets taken away from them. Same with us. If we start throwing pesticides into how we work with people, we're going to get that ripped from us. And I love that. I'm really glad that that's there because that's who I'm aligning myself with. And I wouldn't want anything less for who I'm involved with and how I'm doing my business.
So true.
So true.
Shears, go for it, sir.
Yeah, go for it.
Well, I was going to say also, our Bank on Yourself or boy agents are so willing to share the things they come across with the group. And so we're always educating each other year in and year out, conference call after conference call, in-person meetings. And I don't know if that occurs outside of our arena, and I've never seen anything like it. And when I got into Bank on Yourself with no real insurance experience, life experience and business experience, and someone said to me, well, why do you want to work for Bank on Yourself? And it was because the way I was treated as a client, and I could just sense, I could sense the support, and the knowledge and the wisdom and the caring and all that. So I can't speak for any of those other agencies, and I won't bash them either. But I can tell you, once you're in this group, you are so well protected, short term and long term.
So
as
true.
a client.
Yeah. Great. So any of you infinite banking practitioners or thousands of life insurance agents that are listening right now, if you just got you got jealous, reach out to one of us four. We'll talk to you about how you can apply and maybe get approved to be a Bank on Yourself professional.
Yeah. And some of it, as I'm thinking through this and seeing, again, people are saying, oh, I have one of those. I've seen one of those. And just today having a conversation who I looked through their policy and saying, okay, based off of this is, and I like to make sure as I sign with my clients, the guarantees are really important. That is really, really powerful, right? But that in and of itself is important, but like, how do I then put it? Sorry, I'm seeing other things. How do I then put it in place to make sure that as I'm helping my clients, I want to get them to dead without any unnecessary risks. This is the problem with some of the knockoffs, is they're using other similar products, which Nelson Nash says not to use, but people still use in certain places. And that's why I think Banking Yourself was formed, I believe. So with that,
So yeah,
Amanda
we've
Mark,
thrown a lot of things out here. And in true Wealth Wisdom financial channel history, we want to go back to the history. We want to go back to where's this all coming from. We've talked about Pamela Yellen. We've talked about Nelson Nash. We've talked about infinite banking,
who
Banking
are
Yourself.
these people?
Where did they start from? And also, I want to make sure as we go through this, the wonderful one and only Lester Himmel has asked this question in the chat: why don't various types work? And I think that'll be good to like key into the history here, if you don't mind. I think Mark Willis is going to take on the history here.
And we might we'll have to have Lester on the next
yeah, Lester, you're invited
live
to join us next time.
Oh, yeah, that would be phenomenal, Lester. And I'd like to know, maybe I'm the slow one, but what does he mean by various types? Maybe if you want to comment on that, Les, maybe you can let us know. But in the meantime, what I'm going to do is just kind of give everybody a high level. We're not going to go too deep here, but I want to give everyone sort of a background check on how these things came to be, these phrases like infinite banking and bank on yourself, and what is the difference. Anyway, so I hope my screen is sharing, and I'm going to just jump right in. So yeah, essentially there are a lot of knockoffs out there, and we've been kind of talking about that, and that wouldn't be a problem except the gentleman who started the entire revolution, Nelson Nash, he had a very specific thing in mind when he wrote the book, Becoming Your Own Banker. And it became really a best-selling book in the financial space, as much as anyone could have expected. For sure, it's been in multiple editions now. He was absolutely a evangelist. He spoke around the country. I call him the OG, the most interesting man in the insurance world, because he, no other way to put it, he would fly around the world, around the country, talking about this strategy, helping people find financial freedom. What is the infinite banking concept? It's a frame set. It's a mindset using a specific practical tool, dividend paying whole life insurance that allows your money to grow on a guaranteed basis every single year, no matter what happens in the stock market. You have access to the cash where you can use it. You can spend it. You can borrow against it. When you borrow from the policy, it continues to grow and capitalize and compound as if you hadn't touched the money. And of course, it is life insurance, so you'll always leave your family more than you've saved for them. So there's good reasons why Nelson was so thrilled with this strategy. It helped him get out from under the thumb of some nasty mortgage bankers in the early 80s when inflation rates were soaring, kind of like they're doing right now. But like I said, he was an evangelist, but and everything I owe my financial future and the financial lives of my kids and grandkids to Nelson's insights here. Literally, he changed my family tree. But he was not a pastor. His calling was to be an evangelist of the message, and he certainly did that. But one of the unintended consequences was that he never really protected the IP, the intellectual property. And it wasn't until very recently that the infinite banking concept actually trademarked or had any sort of copyright to protect its meaning. So a lot like Xerox or Kleenex, when there's no protection around wording, the wording itself can lose its meaning or value. And so infinite banking advisors who are truly following Nelson's legacy are doing a great job. But there are so many people out there who just, hang their shingle using that phrase or similar phrases. I mean, just Google infinite banking or search on YouTube for infinite banking, and you'll see what I'm talking about. So somewhere along the way, in the late 90s, I believe, Nelson Nash met Pamela Yellen. Pamela was speaking and consulting with hundreds and thousands, really, of financial professionals. And at that time, there was no Bank on Yourself professional program. It was sort of the Wild West. If you talked to your insurance gal or guy and they said, "Oh, yeah, I can do that for you," you just kind of had to hope and pray and trust. But Pamela wrote a great lament. It's a lament psalm is what it is. On page 247 of her book, The Bank on Yourself Revolution, she wrote, "The advisor who set up my first two policies swore up and down that he knew everything there was to know about how to structure them properly. Turns out he didn't. Unfortunately, about a year later, we got a notice that the policy had turned into a modified endowment contract, which means it lost some tax advantages. Pamela spent more than 40 hours on the phone with the insurance company trying to figure out how to fix it. When she spoke with one of the company's top executives, they said they wish the advisors had never read the book or heard about the infinite banking concept because they had no clue how to structure the policies properly, even though the advisor was convinced he did." And that was getting complaints to this insurance company. So, at the end of the day, finding the right advisor to design and implement the bank on yourself type policy was super frustrating to Pamela. So she met with people all over the United States, and there was no program for any quality control. Can you guys imagine? Imagine if there was no quality control for airbags or elevators. Would you get into an elevator if there was no quality control or seal of approval? I wouldn't. So that's where she came up with the Bank on Yourself Professionals program. It just meant something very specific. She trademarked it. She protected it right from the beginning. She's got the language IP'd. She created a fully fledged credential designation where she's designed and developed a training program and a continuing education program. And you can't just say the words "bank on yourself" on the internet. She'll come get you. Her and her team are keeping an eye out for that. And I like that. Because words mean things. I believe that words are important, and you can't just say infinite banking and it mean a very specific thing anymore. And that's a shame. I wish that wasn't the case, but that's the world we find ourselves in. If you say words like guaranteed and secure or tax-free and you don't mean it, then you can go to jail. So, why is it any different with infinite banking? And so that's why Pamela came up with the IP or intellectual property. And I'm so glad she did. So maybe I'll take a break on my little, I got more to present, but why don't I take a break on that for now and get you guys' feedback?
Way to throw in some of your MDiv skills there and your analogies and how you're talking about it with, evangelist versus pastor and a lament. I also love, so I want to talk about Lester's question really quick about the various types. So really quickly, I'll say for those that have read this book, you might have missed it. There's a section in here where Nelson talks about variable universal life, VUL, and indexed universal life, IUL. And he says he never offered them. He never sold a policy like that in order to do infinite banking. And then in the one and only Bank on Yourself Revolution book, which is on my shelf right there behind me, there's a story in there that I love. Actually, it's a golf story. I wonder if Mark knows this story. Mark Bashirs knows this story of a Bank on Yourself professional going at a life insurance conference golfing with one of the executives from an IUL company. And like gentlemen do on the golf course, they made a friendly wager, but this wager was not about golf. It was about indexed universal life versus Bank on Yourself properly designed policies. And they were going to, the Bank on Yourself professional said, "I'll give you $100 if you can show me an IUL policy that's been in force for 10 years or more that can beat a truly Bank on Yourself designed policy." And immediately the executive from the life insurance company said, "I'm not taking that bet." That doesn't tell you all you need to know about IUL and VUL, those two stories, then I don't know what else you can say. There is this SGUL. I'm sure somebody else here that's more familiar with that can talk about that, as well as the direct recognition. Why don't those qualify as Bank on Yourself type whole life policies?
And stay tuned. We've got a spreadsheet that shows direct versus non-direct coming up. So just be on the lookout for that.
Can somebody else talk about SGUL then?
Isn't that a kind of salsa or what is that?
I've never written one and not planning on wasting my time on it. Some sort of guaranteed UL with the special sauce on the front end.
That's right. Secondary guarantee universal life. There's certain, it may or may not guarantee anything except that there will be a death benefit up till a certain age. You'll see cash value kind of do this and peak and then trough and then reach down to zero again right around the time you might need it in retirement. You might have a death benefit guaranteed, but even that can be taken away. The guarantee can be taken away if you don't send in your premium on time, or if other things change, like the owner or the beneficiary. So keep an eye out for secondary to die, or as you say, survivorship, guaranteed universal life. There's not a lot except a cheap death benefit, which is fine if that's what your goal is. Please realize that we are very happy to see all kinds of insurance on Americans and Canadians. It's a good thing to have term insurance, even GUL, in certain circumstances. But if we're talking about banking and cash accumulation, tax-free access to cash, then it needs to be designed this bank on yourself way for us to produce a certain result. If I want to get if I want to cross the ocean, I can either get in an airplane and fly, or I can start digging under the ocean with a shovel. And I don't want to use the wrong tool to accomplish the right task.
I think one of the things that I think about whenever this whole idea of the power of a contract, again, this is what we sign our as agents, we sign our name on, and the guarantees versus the non-guarantees, all that stuff, and the power of a trademark. And if we think the contract and the trademark are like similar, but like how that is really important to look at the trademark and a contract. And, as again, the other thing I thought about was Tim, the co-founder of Banking Yourself, really prides himself on this persistency number of how long people have stayed with a policy. I believe our persistency is really, really high, and that it shows with the people who are the different carriers saying, I want to work with those guys because their policies are staying in force. Mark Bashirs, you might be able to tell us persistency. What the heck does that mean? Because sometimes I'm confused. I'm like, oh, that's good.
Well, I'm going to use that and segue a little bit. Getting into the life insurance industry, sounds pretty scary, right? I mean, if you ever want to stop the person next to you on the airplane talking to you, is you tell them you sell life insurance, and all of a sudden there's a brick wall between you and that person. So why is that? Why is life insurance so taboo to the majority of society? Well, it was from one of two things: bad products put into place with people, and or untrained agents and or agencies. And when I was thinking about getting into this business, I had a little time on my hands, so I shopped around, and I actually went and interviewed at those major brand names that you may or may not know. And unfortunately, I had already spent 18 months studying Nelson's stuff and Pamela's stuff, and I was armed with life insurance jargon and vocabulary. So when I'm sitting with these branch managers that really wanted to hire me so fast because they saw my Rolodex, that's what they saw. They saw the people they wanted me to get to. It really salesy driven, not educated driven. And so after like the third time going back, he really is trying to put the clothes on me. And I said, well, let me stop you there for a second. I've been reading, doing a little homework, and I said, let's engineer a policy that has this and has the paid up additions, and it's a non-Mech, and it's a non-direct recognition type of policy. And he kind of looked at me funny, like, you haven't been trained yet. And I said, well, I've been doing a little reading. So he goes, you know what? I got a client that's coming in to see me right after you, and I'm going to show him this policy. And he showed me this illustration. He goes, give me a second. He turns around to his computer and keys in what I had just described in theory. He spits out another document and puts it next to the one he had. And he looked at me and he said, let me explain one very important thing to you. He goes, if you write this policy the way you just described, you get paid on that number. And then he looked at his illustration, and if you do it my way, you get paid on that number. I almost punched him in the nose. And I said, do you mind if I take these 2 documents home with me so I could study them? And he goes, no, I think you need to do that. And I couldn't believe he let me walk out of there with those illustrations. I mean, this is 13 years ago. And
Yeah.
but I marched out of there saying, that's the guy that's given this industry the bad name. And he's teaching it to other people to give the industry the bad name, which then is keeping our society from learning the best financial tool. And what is society being taught? They're being pushed to Wall Street, pushed to qualified plans. And so it's so empowered me to say, let's go do some good. Let's go teach this, because I know I can teach this. And what you all are doing so much better than most is getting the word out, so much faster, so much more powerful. So I don't know where we were on the questions, but I just had to segue with where we were headed.
What a great story.
And tell you a true story. And every once in a while, I have to tell that same story when someone shows me that illustration from their past agent. I'm like, I've met that guy.
I think that says a lot, and why Mark Willis and us were in this is to make differences in the world. It wasn't about the money, and the reality is a lot of people. And I do want to pay. I do have a child. I want to make sure that I feed him, and that's important, right? But in the end, really, I'm like, how do I make a difference in this world? And in order for me to win, you do not have to lose, or all that stuff. So that's really something that I think is really, really important. And unfortunately, in this industry, and what I hear when people say, "Oh, you can make a lot of money. This is why I'm doing this. I'm part of an MLM and doing this," and I'm like, are you there to serve the client, or are you there to serve yourself? And that's a question that you have to, as a customer, you have to ask, is their heart? And I want to be not a salesperson. I want to be an educator. And if they decide to work with me because I'm educating them well, that's great.
Yep. And if you educate them well, they're going to spread the word, and you're going to do the volume necessary for you to have a healthy practice.
Absolutely. Yep. I know, Mark, you've got more slides, and I always love your slides. So I want to pass this over to you, Mr. Willis, to share some more things for us visual learners out there, like myself.
I'll be that grandpa with the big slide deck, just showing all the old family reunions. Sorry about that, but
just means I don't have to make them.
Yeah, so, that's right.
Oh, good.
Well, hey, I think Mark, that's a very convicting story because it says again that there are all kinds of people in this world. And again, my intention is to always infer ignorance rather than malice when people do something, that's harmful on another person. But there are people who it's malice, that they want to retire before their clients can. And that's a shame. And I'm going to go ahead and say that there's a reason why they called that movie. Remember the movie, The Wolf of, what was it?
Wall Street.
Well, Insurance. Was it Insurance? Which one was it? I can't. No, it was The Wolf of Wall Street. Yeah, which one gives, a regular increasing fee on everybody's retirement accounts to the tune of hundreds of billions of dollars a year, where the Department of Labor says that over a 35-year period, you're going to lose 27% of your entire life savings on a 1% a year fee. And yet the insurance industry is the one with the bad name. Right. So I'm just going to go ahead and put that out there. However, what is it most people who are watching this, listening to this, actually just want? If they've read Nelson's book, if they've read Pamela Yellen's book, what they presumably they want is, I just want this thing to be as advertised. I want it to work. I want to get into my policy and start enjoying the benefits. I want to see cash value. I want to be able to borrow against it. I don't want a bunch of riffraff. I don't want to get into the weeds and get my license, for goodness sakes, and argue with insurance agents on how to design it, like you had to, Mark. It's sort of like an elevator. If you get into an elevator, what do you want? You just want to push that button and up you go, right? So when I think about most people's desire, they want what they're reading. They want to get what they've been, reading about. And most people feel like they have to, educate their financial planner, their CPA, their insurance agent. And it's just unfortunate that there's not, a better solution out there. I mean, think about it. If you had to educate your like your electrician, that would be a problem. If you're like sitting there pointing at your heart surgeon, like, hey, that's the right artery. No, that one over there. That's a problem, So, and if you don't have a qualified, certified elevator technician working on your elevator, you push the wrong button and you might have a lookout below plunge. So it really does matter who is designing and who is consulting you in your bank on yourself journey. If your financial advisor doesn't have specialized training in designing the bank on yourself policy, and you try to use the policy and it's designed incorrectly, you could have a ton of commissions riddling your policy and lowering the growth. We'll talk about that in a minute. It could lose a lot of the tax advantages, or even worse, both of those things can be true at the same time. So you could have a time bomb of taxes riddled with commissions. I mean, this is the exact opposite of what Nelson Nash wanted when he wrote his book. But I've even seen people who advertise themselves as, infinite banking practitioners, certified practitioners of family wealth reserve banking, this and that. And yet their products, I see their work because the clients send them to me, are riddled with all those problems and loan problems. When you borrow against them, they don't keep growing. So I would say even a pilot has a pre-flight checklist. Even if it's your 10,000th flight, you need to have that pre-flight checklist. And, it could be everything from securing the nose engine oil to checking the fuel tank vent to tying down the tail to, tying down the wing to checking the master switch. And just, if you don't have everything checked on that list, you could end up, in a blaze of glory in a field somewhere rather than landing safely on your next landing strip. So I guess I'll pause here for a minute, and then I wanted to go over what we created, which was a surprising. Let's see if I can pull it up here, and I'll just leave it up here. I don't need to get into everything of this, but I did create this nice little infographic. I don't know if you guys can see it there, of just everything we could come up with in preparation for today, of what it takes for our pre-flight checklist when we design a bank on yourself type policy. And this is just some. I don't know if this is even the complete list, but it's pretty darn close.
Can you zoom in a little bit?
It's a little
hard to read. Yeah.
In fact, I'm going to if you want, I can actually go through each one of them, like your agent. Is he or she a captive or independent agent? This just means, can they work for lots of companies, or are they going to just show one company? Is your agent trained in all the questions we're going to go through, or do you feel like you're having to educate him or her? If you feel like you're having to educate him or her, that is a problem. Is the agent's training and stability a problem? I've known a lot of people who are in the infinite banking world. I hate to keep picking on that, but it's true. They'll get their license, and 2 months later, they've got a YouTube channel with several thousand subscribers, and they've been in the business 2 months. So, if you don't have an agent who's been trained, that's going to be a problem in the long run. And, maybe most importantly, is your agent among the 200 Bank on Yourself professionals in good standing with Bank on Yourself or not?
Can I add to that? Can your agent give you a list of happy clients?
There you go. That's a great question. Yeah, love that.
I have about 300 happy clients that I'd be happy, that would always be happy to stand up for me if someone wanted to be used as a reference.
Yeah. The agent is probably the most important part of this, out of everything else. There's plenty more to go over, but this is the most important dial. Do you have this agent dialed in, or is it just your uncle, with a insurance textbook in his back pocket? Next, you got to have the right insurance company. First of all, is whole life insurance even offered at the company you're working with and considering? Or is it variable or universal life like Les Himmel was talking about? Is the company mutually owned, or is it stock owned? We just had a demutualization of a company that we won't necessarily name, but it was a big surprise to a lot of the clients that they are no longer an owner in the company they have a policy with. Mm-hmm. That's a big deal. Do you want your life insurance owned by people publicly trading shares of you? your life on Wall Street? Or do you want to be a co-owner, in essence, a co-owner with people who have a long-term interest in the health and viability of that insurance company? Is customer service something that you've even, that the client or that the insurance company has worked on? Is it going to be a nightmare trying to get your money out when you ask for a policy loan? And then lastly, does that company have a very high recorded financial strength on the Comdex rating in particular? But there's lots of other. AM Best has one, Standard & Poor has one. Are they a good financial company? We want to make sure they're going to last at least 100 years. Any feedback or aha moments on this one?
On bullet point number 2, I'd add there's also privately held insurance companies. And I personally wouldn't want my life to be insured by a single family.
Well, that's interesting. Yeah. Private equity. Is that what you're referring to?
Yeah. There's a company I think of that's still privately owned by a small group of individuals, and they have a lot of control over that very big company, that I wouldn't want such a small group to have so much control over my financial future and my children's and grandchildren's, right?
Big deal.
The other thing I was thinking about is owning policies with the various companies. I have stake in those companies myself, because it is my plan for the future just as much. So asking again, what are you doing with your money? How have you worked with them for my own sake, not just for my client's sake, but for my own? And that's a different conversation than, well, my clients did this or that. No, I've done this, and this is how I used my policy to buy my office condo or whatever.
Yeah. It boils down to, do you want to be an asset of a company, or do you want to be the owner of that company? Good stuff. Next, tax nature. Is this policy a Mech? And do I want it to lose any specific tax advantages? A modified endowment contract is what Mech stands for. And there's a long conversation about that, which we probably don't have time for. But many people don't realize that their policy became a Mech. One of those stories I told earlier, the guy who had $700,000 in cash value, several of those policies had accidentally become taxable under the Mech provisions of the tax law through TAMRA Act and more. Next, will principal and gains be accessible tax-free under current law? Guys, any thoughts, any war stories on this one, on the tax nature of bank on yourself designed policies?
Well, and I will push back a little bit on the Mech thing. Sometimes we do design policies with a Mech intended, and that is by design. And so don't be scared that, oh, it's not supposed to be a Mech, but is it going to help you get you to where you want to go? And sometimes it is needed and sometimes not. But if the person doesn't know what the heck a Mech is, then you need to run.
That's right.
And again, there's by design that maybe it's needed, maybe not. There's reasons to have it.
And that's back to the excellent training to know when and when not to use that Mech.
Well said. Yeah. Do we want it to, is the question. Yep. Does the client understand it? Yeah, that's a great point, guys. Great stuff. Riders is the next section we put together here. Are paid up additions even offered? On premiums, this is really an important distinction. Can paid up additions be a rider, or will you only get paid up additions through dividend reinvestment, you might say? So that's a big one. What is the insurance company's paid up additions load cost? I'll give you a quick story on this one. Gentleman who had a really famous, mutually owned, dividend-paying whole life insurance company with a good financial strength. It was designed non-Mech. Sounds like we're doing fine. And then we took a look at the load costs on paid-up additions. They were an egregious, and like 3 times higher than the industry average. He was paying 15 cents of every dollar on his paid-up additions was going toward load costs, and that was for the next 20 years. We moved that money as often we need to do through a 1035 tax-free exchange into a true bank on yourself design policy where the load costs was cut by 66%. and he no longer is bothered by dumping in large sums, why would you feel motivated to dump a large sum of money into a policy if you're going to get dinged with 15% load costs on the very front? All right. What are paid up addition limits and gotchas? Every insurance company has the limits. Are we happy with those limits? When are we going to be forced to stop putting in paid up additions? I've had folks who were unfortunate enough to be unable to keep funding into their policies that were designed improperly. Were any other riders available to help accelerate my cash value growth? The term rider was not even mentioned in Nelson Nash's book, for example. And that's a crucial rider that we use to help accelerate the cash value even more. Hey, if you miss a premium payment, are there any protections? Are you going to lose any guarantees if you miss a premium payment? Sometimes that's the case with, funny enough, guaranteed universal life can lose that guarantee. And then was there a chronic illness rider or similar riders available? Were there any fees on that rider? And then finally, what are the limits of that chronic long-term care accelerated death benefit rider? Guys, any feelings, thoughts on this or any other riders you'd want to talk about?
Such a good list. I would triple underscore this reference to the term rider, that is something that is super awesome. And I'm very glad that Pamela has made that part of what it means to be a true Bank on Yourself designed policy. And there's an amazing thing. I'm going to put a link to it in the notes where she has talks about, it's in one of the chapters in her book, but she also has it on her website, called The Genius of Good Structure, and how these policies are structured to include some of these riders in the right proportion and all those kind of things. It's going to give you in real numbers what happens to the cash value and the death benefit if these riders are included or not. So check it out.
Yeah.
I'll put
Love
it in the notes here.
Something I wanted to add was looking at all of this, it can be overwhelming as the consumer, maybe buying a policy and saying, oh, I need to know all of this stuff, right? And that's kind of like the heart surgeon idea, is you want to find the right heart surgeon so you don't have to learn how to do heart surgery and do YouTube lists to figure out, is he going to do it right? Right. And so you're not going to know these things. You probably won't even, as you do a financial analysis with us or the going through the process, we're already thinking about that before. And those are things that are filtering for us before we even get to you. And we might not even talk about it because you don't need to know how the engine is built. Maybe you do, and that's important to share that. But not all the time do we need to know. We just need to know that the car is going to get me to where I need to go.
Just push the elevator button and hope you get to the right floor. If it's designed properly, it's going to be fine. Go for it, Mark.
Yeah, talking about design and that term rider, I have clients now that are, passing their 10-year mark. And part of that structure was that a 10-year term rider. So is that term rider convertible with other carriers is a big point as well. And here's another little true life story is I have clients that have become uninsurable in that last 10-year window, but now they have this 10-year term rider that has technically you're going to drop it or convert it. And the with the proper company that you have, they'll honor the health rating you had when you started that term rider 10 years ago. And so I've had several clients, start a new policy with that without going through the underwriting and labs.
Wow.
It's great point, Mark, and another great reason why working with you, Mark, as a Bank on Yourself professional, saved them all of that heartache of having to lose that otherwise very valuable asset for their family. That's phenomenal. All right, so we're not going to spend too much time on this spreadsheet here, but I do want to just show. Look at that. In 5 years, you can either have 54 grand in cash value or 100 grand in cash value for the same.
I'll take
premium.
100.
Yeah.
I'll take 100.
So this is maybe similar to the two spreadsheets that you were handed by that insurance agent. Notice the differences in the death benefit, which is where, most of the commissions are built around the size of the death benefit. So if we can shrink that death benefit down, as you see on the right side of the screen, the agent gets a lot less commission, but we do right by our client.
And that you're showing, again, the old fashioned or the way to design it effectively. And some people, if you notice here, they did the 40-60 blend or whatever. There's a lot of YouTube videos right now on 90-10 or 10-80 or any of that stuff. You did put that there. Why is it important as a bank and yourself person, advisor? Why is that percentage, again, look up 90-10, 40-30, whatever, I don't know. Why is that important to think about?
Are you able on this to put our video? Oh yeah, great. Thank you. The reason why I wanted to get down to the bottom to answer your question there, Brandon, look at the bottom line, quite literally the bottom line. If you have a 90-10 product design, the base premium is put into a very small face amount, and you have 90% of your money going into paid up additions. And the world would have you think on YouTube that paid up additions are God's gift to man, and the base contract, the base premium, is somehow an evil scourge that must be banished from the into the seven winds. Nothing could be further from the truth. If we have a correct blend of both long-term and short-term cash, you're going to have a much better growth over your entire life. I kind of liken it, and this is someone else's analogy, but it's like a sailboat. If you have a properly structured sailboat, you're going to go very far for a long distance. If your sailboat has a tiny little hull, but a giant mast on top of it, then it's going to topple over. It's top heavy. So what we want is a policy that's got a good blend of base insurance and paid up additions. It will mean you'll have a little less early cash value, but the dividends are paid most primarily on the base contract. And so 25 years later, 10 years later, 15, 20, 30, 40 years later, you're going to see those dividends just like snowballing in a good way, where you're just blowing up your wealth in a good way. So you've got even larger cash value than you would have otherwise had with a 90-10 type contract. So, and that's why by the time even the all base contract on the far left there, you still got almost $1 million in cash value. Look at how that thing is growing. Even on the old fashioned side, that's not too shabby if you do the math on that.
Yeah. I just want to make sure we talk about that because, again, there's a lot of people who are, oh yeah, you're, blah, 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 this and that, so.
Yep.
So Mark, I don't mean to jump in here, but we could talk for hours and hours and we're actually almost to a full hour of talking. Can you go back to that full list?
Sure. Yeah. Actually, that's actually a really good point. I'll just do that now.
So there are so many bullet points here. If we counted them, there's 20 plus, right?
Yeah. Close to 30.
Yeah. If this doesn't tell you why you need to make sure that you talk with a true bank on yourself professional who knows this whole list in and out like the back of their hand and dreams about this stuff when and thinks about it day in and day out. I don't know what else would. Like I mentioned dreaming because last night I totally was dreaming about work. I woke up this morning thinking about work. This is what we do day in and day out, and even night in and night out. And I want to make sure that everybody knows how to connect with each of us here, as well as how you can find out more about Bank on Yourself. So the main website where you can connect with one of the 200 Bank on Yourself professionals in Canada or in the United States is bankonyourself.com. You can check out the comments where I put a link to one of my favorite pages on that website. And Pamela offers to connect you to a Bank on Yourself professional for a no obligation, no cost financial analysis. And she doesn't make that recommendation or that connection lightly. She has vetted each one of us. She keeps us accountable along with her team to what we're doing. So do that. But also, if you connected with one of us here, we want you to be able to have that direct connection too. So I'll let Mark, you might want to share some things from your screen here.
Oh, that's fine. I'm just underlining what you're saying. Great work. And find and work with a Bank on Yourself professional. Go to bankonyourself.com.
Okay. And then, of course, subscribe to the Not Your Average Financial podcast and go through the back roll of Mark's podcast, where he's done a lot more in-depth explanation of all this fancy language you've been using today. And then the Wealth Wisdom Financial podcast, where we tell more stories and history about different things too. And then Mark Bashir's, please tell us your amazing website where people can connect with you.
Well, I'll just say the fastest way to make an appointment is bookwithmark.com. And that's Mark with a C, not like the other guy in the other box.
So Book with Mark, your also website is Top Wealth Agenda, right?
Yep, topwealthagenda.com.
So find him at topwealthagenda.com. Find us at wealthwisdomfp.com. And Mark is Not Your Average Financial Podcast, right? .com.
I kept mine real short. Yeah. Not Your Average Financial Podcast.com. Yep.
Yeah,
Thank you guys so much. What a great time.
This is what I want to do. Make sure I want to land the plane. We are using this analogy of, the panels and all that. So land the plane for us. Now, as we went through a whole lot here, we want to continue to do this. We're going to do this on a monthly basis. Maybe if you guys like this, let us know. We want to do more of this stuff if it's helpful for you. And so if you want us, it is a lot of work to do these things. But if you want this bi-weekly or whatever, let us know. But at least monthly, we are going to be doing this. Next month, around the same time, will be about how we use other tools to amplify your financial life. Because it's not just thinking about this little product, but it's how does this connect in conjunction? What's the weather outside and how does the plane and all that stuff fit? So with all that said, thank you guys for being here and being a part of our inaugural video, YouTube Live. This will be one of many. So
thank you very much, guys. Thanks for inviting us.
Yeah.
Oh, and by the way, don't forget to like, subscribe, and write a comment below.
And for those of you that have stayed here all the way to the end, I want to give you a special treat, a really good dad joke, my son's favorite dad joke. Okay, you ready for this? What do you call a cold burrito?
Burrito?
Exactly, a burrito.
Yes.
And I'm pretty sure my little guy, 4-year-old, is watching right now because there was no school today. So hi, little man, and we'll see you on this channel one day as well.
He has been on this channel, by the way.
He has, it's true.
Thanks, you guys.
Thank you. Bye-bye.
Bye.